Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Jack Miller, Head of Global Execution Services over at Baird. We're going to discuss the direction of the SEC market structure agenda, and we'll also take a look at some of the institutional trends that he is seeing. Jack, it is great to see you as always. Welcome back to MarketSite.
Great to be here. Thanks, Jill.
2022, but a little bit of a roller coaster.
Yeah.
We're still seeing that volatility play out. What trends are you seeing on the institutional side of the business?
Well, look, we've definitely seen a pickup in activity over the last couple of weeks in particular. So whether it's Q3 earnings, whether it is the midterm elections being behind us, or maybe now getting some clarity in terms of the direction of inflation and the Fed, we have seen institutions come back and engage in a way that, despite all the catalysts and all the volatility we've seen through the year, that hadn't always played out that way. And so definitely expect to be busy here through the end of the year, helping clients reposition their portfolios. Fundamentally, though, the challenge hasn't changed. Liquidity is precious. Markets are complex and fragmented, and our job is to help clients navigate that, find that liquidity, and we're just keeping after that.
Well, and there continues to be a spirited conversation around the possible direction that the SEC is going to take in terms of its market structure agenda. And of course, what's been happening in the digital asset space only helps to illuminate that conversation. What are your expectations as we go forward? Because they're going to have to start to balance the traditional asset classes with what's happening in the digital space.
100%. So I think stepping back and kind of looking at the conversation that's been going on all year, we've seen a lot of what I'd call sort of policy statements or position statements from the SEC. So these, I use that term intentionally, more directions and areas of focus rather than specific proposals. And Chair Gensler has laid out a number of them, 6 of them, whether it's trade increments, the NBBO, payment for order flow, but particularly this idea of order by order competition has picked up some steam lately, which would obviously dramatically change the retail market structure, requiring orders to be exposed to an auction for market participants to compete for those orders. We had been sort of expecting a proposal this month. Now, with everything going on in the digital asset space, we'll see whether that has kind of shifted the focus in the near term.
Right, especially with resources being stretched. What is the key problem that the reforms are trying to solve?
Yeah, well, I think it's kind of 2 things. One is, do the markets as they're displayed really reflect the true liquidity landscape that's out there? So that's the questions around trade increments and the NBBO. But then also, do we have the correct market structure, and do we have the right motivations, I guess, in place to have market participants working properly to drive good outcomes for clients? And that's where we get into some of the things around conflicts of interest and order by order competition. I did think, though, it's always useful to kind of check in on the state of the state with how we're performing under the current market structure. Just looking at our retail activity at Baird, if you look at the top 100 names that our retail clients are trading, the average bid-ask spread on those is about 6 basis points on average. So we're able to find price improvement on most market orders, but even if we took that all the way to the midpoint across the board, we're talking about a 3 basis points improvement. That's not nothing. Every bit is significant, but I think it's helpful to illustrate, well, one, just how well things are actually performing today, especially when contrasted against other asset classes.
Let's talk about what's happening in the crypto space for a moment here, because there certainly are many lessons that can be learned, and I feel like we kind of go through this every 10, 15 years, regardless of the asset class, where it comes down to, well, besides fraud, but risk management and leverage.
Yeah, it's always sort of the less flashy things that kind of come to the surface in these sorts of episodes. And so, look, I mean, I think it's a good opportunity to reflect as we think about a market like U.S. equities, just how deep and liquid it is, but also how mature the market structure is. It's not perfect. It certainly has flaws, but what we do have is a very robust ecosystem of participants really competing to add value for their clients, whoever those clients might be. And some of the things we take for granted, trades settle, deposits are available. Hopefully this is an opportunity to reflect on how well that actually functions in the equities market today.
Well, I mean, it lends to, protecting customers and having the regulatory framework in place to avoid something as systemic as what we're seeing play out in the digital asset space.
Exactly.
All right. Appreciate the insight as always, Jack. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.